Okay, everybody, it is me, Gregory Mannarino. It is Thursday, June 16, 2022. We're going to start off this video with what is a very profound piece of information. So we understand that the European Central Bank has been concerned about fragmentation in the debt market. Well, we just found out that the European Central Bank is about to deploy some kind of emergency anti-crisis tool, anti-crisis prevention tool to prevent fragmentation of the debt market. People, this is exactly what you and I have known about for literally an entire decade now. What does this mean in the grand scheme of things? The Federal Reserve must do the same. The debt market as a whole, this is a global issue. In order for an economy or for a market to run normally, there must be some kind of stability in the debt market. Now, as of late, look, this is my take on this. You're entitled to your own. The bang, 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 bang higher in that 10-year yield is a sign to me that clearly there's instability in the debt market. And this is being backed up by the European Central Bank now saying they're going to use emergency tools to stop a crisis. We are in a crisis, okay? We have been living, you and I, under the threat of a debt market implosion for a very long time. The central banks of the world, along with puppet governments, have inflated a monster. It's a freaking monster. And when this bubble burst, and it looks like it's happening now, don't take my word for it, okay? I've only been telling you this for an entire decade, but listen to the European Central Bank, okay? The Federal Reserve must follow suit. They're going to do something, and mark my words, whatever they do is going to be massively inflationary, people. I don't know another way to put this. I believe sincerely, at least I would hope, that if you've been with me for any length of time, I have prepared you for what's coming here. This is not just a financial issue, people. I've explained to you how I see this playing out. This is a resource problem that is going to develop, and the potential for this, well, actually, it's not even a potential. The fact of the matter is, an implosion in the debt market is going to change everything. Everything is going to change. None of this is by accident. Central banks have hyperinflated a debt bubble for this very reason. We knew an implosion was going to come. No one knew when, okay? We witnessed some pretty profound things as of late. The debt market has been stable since the stock market started to pull back, which has been a normal corrective phase up until just recently when we started seeing the spiking in that 10-year yield. A whole new thing is right in front of us, people. And take heed here. If the European Central Bank is explaining they're going to be deploying anti-crisis prevention tools to stop fragmentation of the debt market, pay attention to this, okay? Pay attention. We also found out this morning, imagine my shock here, that inflation is not peaking. And who's going to be held to account for that? Let me ask you, again, central bankers, the U.S. Treasury Secretary Yellen, who's now admitting she was wrong on inflation being transitory, who's going to be held to account? Nobody. You think retard presidents or anybody else is going to point their fingers at the Federal Reserve or any other central bank? You got another thing coming here. This was never transitory. You knew it because we knew this from day one, okay? This has been a lie. They continue to lie. Then, inflation's peaking. That was a lie. I mean, you go on and on with this here. All right, on the economic news front, first-time unemployment claims came in worse than expected, and housing starts fell off of a cliff. I'm watching Bloomberg this morning. Oh, the U.S. might already be in recession. People, we are so far beyond a recession. We are in collapse, okay? And this is a phenomenon that is global. You all know that. let's move forward here. On the back of all this here, on the back of the European Central Bank with their emergency anti-crisis tool, and the talk of, yeah, we're in recession, the stock market right now is poised for a drop at the open. All right, we're going to give back, at least at the open, everything we gained yesterday. I told you I didn't think this was over yesterday. Nothing was fixed by the Federal Reserve 75 basis point hike. Oh, that's another thing. You remember how the Fed said they would, oh, we're never going to do that. That was another lie. Look, the Fed can raise the federal funds rate to the moon. It is not going to stop inflation from surging higher, especially in light of the fact that the debt market, don't listen to Greg Mannarino, let's listen to the European Central Bank, is fragmenting, or they want to prevent it from fragmenting. What is fragmenting? Imploding, okay? Just like you and I have known for freaking years. So what else is going on here? We got gold and silver catching a bid, Bitcoin still hovering around 21,000, crude oil under a little bit of pressure here. Okay. That's the story for this morning. I think this is profound. I really have to say that. Look, you and I have been waiting for one thing, and I've explained this to you for an entire decade. One thing, the inevitable implosion of the debt market, or a fragmentation, let's use their word, of the debt market. Well, people, again, don't take my word for it. Let's listen to the European Central Bank. Let's see what they do here, okay? And what the Federal Reserve is going to do. Because, again, the European Central Bank cannot be the only central bank that's going to deploy emergency anti-crisis tools to prevent an implosion in the debt market. The Fed must do the same. And whatever they do is going to be massively inflationary. Massively inflationary. Understand, I think you do. All right, look, so in summary here, that's the biggest story to me. Forget the fact that the stock market's going to drop at the open. Forget about the fact that housing starts fell off of a cliff, that unemployment claims came in higher than expected, that they're talking about that the U.S. economy may recession. You got to be kidding me. You can't, look, you can't make this stuff up. No one can. We are in collapse. What else can I tell you, people? Look, continue to bet against the debt. Become your own central bank. Hold hard assets. Me, I am all in on commodities. Listen to what I'm telling you. I am all in on commodities right now. I really believe that's the place to be. Could I be wrong? Absolutely, I could be wrong, but I'm just telling you what I am doing. All right, with that said, let's watch the freak show. I mean, it's an epic freaking disaster area. It's beyond. It's freaking beyond. I think we all know that here. Keep your eyes on that 10-year yield. You know what? Forget about the 10-year yield for a moment. Yes, I just said forget about it. Watch the MMRI, Mannarino Market Risk Indicator, link in the description of this video. When you see that rising, like it is now, we are not looking very good. It's high. The higher that goes, you can count on how higher that 10-year yield is going as with it. All right. Anyway, look, that's the story. That's where we are. One last thing. I got a real treat for all of you. A friend of mine, his name is Chuck Barone. He's an ex-Wall Streeter, ex-Lehman Brothers guy, as a matter of fact. He is going to put out his very first video today. Okay, I put this out in my newsletter last night. I want you to subscribe to this guy's channel if you have not already, because again, I put this out in my newsletter. There is a link in the description of this video to Chuck's channel. You're going to want to hear what this guy has to say. He's going to put it all on the line. I'm telling you. So you're in for a real treat later. I don't know when his video is coming out, but you're going to be the first to see it if you subscribe to his channel. Again, link in the description of this video. This guy here loves you a lot, people. Look, we need each other more than ever right now, okay? Don't listen to Greg Mannarino anymore. Listen to the European Central Bank. Debt market fragmentation. They are now deploying emergency tools to prevent it. The Fed and other central banks are going to follow suit here. And all this is going to do is exacerbate the inflation issue, and they can't stop. They cannot stop the debt market from imploding. They can push it off. They can push it off. But all it's going to do is exacerbate the entire issue. You understand? I think you do. People, prepare yourselves in every way that you can. Okay? I'm telling you right here and right now. This guy loves you. Please share the video. Get it out there. Sub to Chuck's channel and wait for his video today. I'm sure I can't wait for it. I'm telling you right now. I'll be watching it along with you. I'll see you all later. I'm out of here.